When we hear the word billionaire, our minds usually jump straight to luxury, big houses, expensive cars, and a lifestyle that feels completely out of reach. But the interesting part is that those things aren't where their money goes first. Long before the lifestyle, there are very intentional decisions being made behind the scenes. In this video, I want to talk about the first places billionaires usually put their money, and more importantly, why they do it that way. This isn't about copying billionaires or trying to live like them. It's about understanding how people who think long-term make choices that protect and grow what they have. Before we get into it, if you enjoyed calm, honest conversations about money and mindset, take a moment to like this video, subscribe to the channel, and turn on the bell. It really helps, and it lets you know when the next video is out. Number 5. Government bonds and treasury securities. This one sounds boring, but hear me out. When billionaires want to protect their wealth, not grow it aggressively, they turn to the safest investment on the planet: government bonds and treasury securities. This is where they park hundreds of millions, sometimes billions, knowing it's protected from market crashes and economic chaos. Why do the richest people in the world put money in something with relatively low returns? Because preservation matters more than growth once you've already made your billions. They're not trying to get richer off their bond investments. They're making sure that no matter what happens, a significant chunk of their wealth is secure and liquid. If the stock market crashes tomorrow, their treasury holdings won't disappear. There's also a practical side to this. Billionaires need liquidity for opportunities, emergencies, or just maintaining their lifestyle. Treasury securities can be easily sold without taking massive losses, unlike real estate or private equity holdings that could take months or years to liquidate. It's their financial cushion, their dry powder for when opportunities arise. And let's not forget the tax advantages. Interest from certain government bonds is exempt from state and local taxes, which adds up when you're dealing with massive amounts. For someone managing billions, even a small tax advantage on a safe investment is worth millions in savings. Government bonds might not be exciting, but they're essential to how billionaires protect and preserve what they've built. It's the smart money safety net, and that's exactly why it deserves a spot in their portfolios. Number 4. Alternative assets and collectibles. Now this is where billionaires get creative. Beyond traditional investments, they pour serious money into what most people would consider hobbies: art, rare cars, wine collections, rare watches, and even sports teams. But make no mistake, this isn't just for fun. These are calculated investments that serve multiple purposes. Art is a perfect example. A Picasso or a Basquiat hanging in a billionaire's mansion isn't just decoration. It's a store of value that appreciates over time, often outpacing inflation. The global art market has proven to be remarkably resilient, and the most sought-after pieces from renowned artists only become more valuable as time passes. Plus, art can be used as collateral for loans, moved across borders relatively easily, and provides a way to quietly transfer wealth. Collectible cars, vintage wines, and rare watches operate on the same principle. These aren't mass-produced items that lose value. They're scarce assets with passionate collector bases, driving up prices. A 1962 Ferrari GTO or a bottle of 1945 Romanée Conti isn't something you can just buy anywhere, and that scarcity makes them investment-grade assets. Then there are sports teams. Owning a professional franchise has become one of the ultimate billionaire status symbols, but it's also a brilliant financial move. Team valuations have skyrocketed over the past few decades, and they come with exclusive revenue streams from broadcasting rights, merchandise, and ticket sales. Plus, there's only a limited number of teams in major leagues, making them incredibly rare assets. When billionaires buy teams, they're not just buying entertainment. They're buying appreciating assets with built-in monopolies in their markets. Number 3. Private equity and venture capital. While most average investors are limited to buying shares of publicly traded companies on the stock market, billionaires operate in a completely different arena: the private markets. This is where some of the biggest fortunes are made, and it's a playground most people never see. Private markets include investments in private equity and venture capital, which give the ultra-wealthy early access to companies before they go public. before the valuations skyrocket and long before the general public even hears about them. Think about it this way. If you had invested in Facebook, Uber, or Airbnb when they were still private startups, your returns would have been astronomical, returns that are almost impossible to achieve in traditional public markets. This is exactly the strategy billionaires use. They write substantial checks to promising startups or private companies, often getting in at the ground level, and then patiently watch as their investments grow tenfold, 20-fold, or even 100-fold over time. But the advantage isn't just in the raw financial returns. There's also power in influence and network effects. When a billionaire invests in a startup, they often gain a board seat or a significant say in how the company is run. This allows them to guide strategy, open doors to other investors or key clients, and actively steer the company toward success. They're not just passive investors waiting for growth. They're shaping the outcome, increasing the likelihood of a massive payoff. Another key advantage of private markets is the pace. Unlike public stocks, which are subject to daily price swings, quarterly earnings pressure, and constant media scrutiny, private companies move slower. This slower pace allows billionaires to take a long-term view, patiently letting their investments mature until the timing for an exit, through acquisition, IPO, or other means, is perfect. This patient capital compounds wealth in ways that public markets simply can't match. Number 2. Their own businesses and companies. This might sound surprising, but the wealthiest people in the world keep the vast majority of their money tied up in the companies they built. Take Jeff Bezos with Amazon, Elon Musk with Tesla and SpaceX, or Mark Zuckerberg with Meta. They're not cashing out to live a life of leisure. They're doubling down on what they created. Why do they do this? Because as founders, they have ultimate control and insight that no outside investor could ever have. They know the inner workings of their companies, the products in development, the markets they're about to dominate, and the strategic moves that could shape future growth. This isn't illegal insider trading. It's the founder's advantage. When you've built something from the ground up, you understand it at a depth no analyst or investor ever could. There's also a clever financial strategy behind it. Keeping their wealth tied up in their companies provides tax advantages that most regular investors don't have. Instead of selling shares and paying massive capital gains taxes, they can borrow against their stock holdings at incredibly low interest rates. Essentially, they can access liquidity without actually liquidating their positions. This allows them to maintain control, benefit from long-term growth, and still spend money when they need it. It's a way to have their cake and eat it too. On top of that, their companies often outperform the broader market because these billionaires aren't passive investors. They're actively steering their businesses toward success every single day. This is strategic wealth building at the highest level. They're not just holding assets, they're shaping them, managing them, and maximizing their potential. Number 1. Real estate and land holdings. Here's the truth. Billionaires love real estate, and for good reason. It's tangible, it's scarce, and it's not going anywhere. When Warren Buffett or Bill Gates buy land, they're not just buying property, they're buying security. Real estate gives them something stocks can never provide: visible control over an asset that people will always need. Think about it this way. You can't create more land, but you can always print more money. That's why billionaires snap up prime real estate in major cities, farmland in the heartland, and entire islands if they can get their hands on them. They know that as populations grow and cities expand, the value of these holdings only goes up. It's not just about rental income or property appreciation. It's about owning a piece of the earth that will always have value, no matter what happens to currencies or governments. What stands out when you look at these patterns is that wealth is rarely built by chasing quick wins. It's built by putting money into places that feel boring, slow, and sometimes even invisible, but strong enough to last for decades. I'm genuinely curious. Did any of these priorities change the way you think about money, even a little? Share your thoughts in the comments. These discussions help all of us learn from each other. If this video felt useful or gave you a new perspective, don't forget to like, subscribe, and share it with someone who's trying to make smarter choices with their money. Thanks for spending your time here, and I'll see you in the next one.